Hello and welcome to this April 26, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Metallico Inc. This is about a $282 million basic materials company. Just featuring the last few months here. I wanted to show an up close of some of the candlesticks here. You can see that MEA put in a hammer back on February 5th when the market overall was bottoming. So you can see we came down some pretty heavy volume here over a couple of days. Put in this hammer after printing below $4.40. This was again on February 5th. And then by just past March 5th, looks like maybe around March 12th or 13th, MEA had climbed all the way up over $6.60. So we saw roughly a 50% move to the upside in just a little over a month. So MEA made a beautiful move up and has really just been consolidating sideways here for the last, let's call it 5-6 weeks, and we're awaiting a breakout. Now recently, the last couple of days, toward the end of last week, we saw a little bit of movement to the downside, getting close to the bottom of this triangle, and as a result, it's not a bad risk-reward area to enter into a trade here. Now, if MEA were to break out above 635, you want to see some increasing volume. But if we make that breakout from the bottom of this triangle to the top, it's roughly $1. So if we break above 635, you can tack on about another $1 for measurement, which would take us up into the I don't know, 7.25, 750 range, something like that. But during this consolidation period, you can see it's really helped relieve the RSI, which was up near 70. We had stochastics that for about 3 or 4 weeks was up in the 80s and 90s. That has come down, and now the stock is currently trading with an RSI right around the 50 line, which is usually a pretty good support area. And stochastics has fallen all the way back down to 22. Obviously a much better level to think about entering rather than chasing the stock after it's already made a big move and it's got these overbought oscillators. So I think from a risk-reward standpoint, MEA seems to make a lot of sense here. In the near term, a couple of levels to look at. Number one, it closed back below about 590 or so, would take out these recent lows. That would be a little bit of a red flag. You've got a recent price low on a closing basis at about 575, and you can see this tail back on March 22nd came all the way back down to retest this breakout area. You can see also about 2 weeks earlier there was another tail did the same thing. So this 565 area provides excellent long-term price support. So even if we lose the 50-day, depending on the volume, if the volume were to stay light, you could make an excuse for it down to 565. Top side though, what we're looking for here is a breakout. Let's get it through 635. Let's see the volume coming in, and let's get a confirmed breakout above 635 on the close. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.